Hey, good evening, everyone. Thank you for joining tonight's US webinar. We have a special guest who has came back regularly, Grace Shu from Direction. As we all know, after Trump became the president, things are getting more volatile. We need to check the news every day, basically for the latest update on what he's up to. But so far, things are still looking pretty good. I think for the US market, S&P 500 is nearing its all-time high. So far, the Max 7 and most of the corporate results have done fairly well in terms of earnings. And one of the two best markets, Hang Seng market, China market has done relatively well as well. The tech stocks, the China tech stocks. So how do you profit from this? I think some of the ETFs from Direction, you will be able to profit from some of this. Some may think that, the market has gone up so much, Well, there's the Inverse ETF for you to look at. And those who still feel bullish on it, there's the Leveaged ETFs for you as well. Some of the key thematic ETFs from Direction. Over to you, Grace, on the outlook as also the opportunities for all. Over to you, Grace.
Okay. Thanks, Vincent, for your introduction, and good evening. Thanks for attending today's webinar, and thanks Rakuten Trade for organizing it. My name is Grace Chiu. I believe if many of you, have been, joining the webinar hosted by Rakuten Trade, probably you know me already. So I've been doing business development for Asia for Direction, for the past 12 years. Today I'm very happy to have this opportunity to provide, the Leveaged Inverse ETF, some education, and also share the 2025 popular trading opportunities with everyone today. And I hope the webinar tonight will help you have, for example, better understand Leveaged Inverse ETF, and this webinar could also help provide more insights on your trading or investment strategies going forward. And this is the required disclosure by the regulator. The webinar information tonight are for the education only and are not intended to be any sales or marketing discussion under any circumstances. So Direction, if you've ever traded US listed leverage or inverse ETF, and I believe you may have heard about Direction, but I believe many of you may not know Direction company name, but probably you already know many of our ETF tickers because some of our 3-time leverage inverse ETF actually are very popular for traders and some active investors as well. Direction is among the top 2 global provider of leverage and inverse ETF products. As you can see, as of end of December last year, our total asset under management are over US dollar, for 47 billion. And Direction is particularly famous for 3-time leverage and 3-time inverse ETF in the world, especially US market. And almost 80% of 3-time leverage or 3-time inverse ETF listed in the US market actually are launched by Direction. So far, we have around 99 ETF listed on the New York Stock Exchange and the NASDAQ, and most of them are 3-times leverage or 3-times inverse ETF. So most of them, all of them are listed in US market. So investors can trade this kind of ETF like they trade US equities. And this slide, as mentioned, Direction's core product line is leverage and inverse ETF, right? So leverage and inverse ETF are short-term trading tools that enable traders to express their bullish or bearish views. As you can see from this slide, unlike non-leverage ETF such as iShare or Vanguard ETF, you probably know, for example, like SPY or QQQ, this kind of non-leverage ETF, leverage and inverse ETF are designed for the short-term trading instead of intermediate to long-term investing. The average holding period for leverage and inverse ETF is from days to weeks only, definitely not several months or years. So it's very different. And with leverage and inverse, ETF, investors can not only express their tactical bullish view or bearish view, but also amplify the potential return by taking advantage of the daily leverage ratio generated by leverage or inverse ETF. So let's take a daily 3-time leverage inverse ETF, for example. If the tracking index or tracking benchmark is up 1% today, this daily 3-time leverage or bull ETF will go up 3% today, while the daily 3-time inverse or bear ETF will be down 3% today. Vice versa, if the tracking index is down 1%, this daily 3 times bull ETF will have 3% loss today, while the 3 times bear ETF will go up 3%. So it's very easy and simple to understand, the basic about leverage and inverse ETF. And before we jump to the popular trading theme, I want to go through quickly the basic education about leverage and inverse ETF quickly. Why are we emphasizing the basic education about leverage inverse ETF? Is because actually we found more and more investors have been using leverage inverse ETF, especially in the past 3 to 4 years. However, some investors still have questions regarding how leverage inverse ETF work and how to use this kind of trading tool in the correct way. Also, look forward. There are many catalysts for higher upside and downside volatility ahead, as Vincent mentioned at the beginning, which might bring more market volatility, and the role of a short-term trading tool, such as leverage inverse ETF, will become more important for investors to capture the short-term potential market rally or hedge the down market. And from this slide, I just want to emphasize, leverage inverse ETF are traded on stock exchange, like stock. For example, all direction ETF are listed in U.S. market, so they are traded like U.S. stock, like Apple, Tesla, etc. And there's no minimum holding period or low minimum investment for leverage or inverse ETF. Investor definitely can trade leverage inverse ETF with the general security account instead of margin account. So you don't need margin account to trade leverage or inverse ETF, but you do need a margin account to trade futures, option, or other derivative products. In Asia, you can find 2 times leverage, 1 time inverse, or 2 time inverse ETF listed on local stock exchange. For example, like in Hong Kong, Malaysia, local issuer also launched leverage inverse ETF, but the maximum leverage ratio probably is 2 times. You don't see 3 times in Asia local market. While in US market, definitely you can find leverage inverse ETF with higher leverage ratio, such as 3 times leverage or 3 times inverse. And in US, you can also find leverage inverse ETF tracking single stock name instead of benchmark or a basket of index. As no margin account is required to trade leverage inverse ETF, unlike other derivative product trading, there is no risk of margin call or forced liquidation for leverage inverse ETF, which means the max loss of leverage or inverse ETF is the initial investment. For example, you trade 100 in one leverage ETF and you bet on the wrong direction, and your maximum loss is 100. You won't lose more than 100, which is your principal investment. Traditional non-leverage ETF are usually physical ETF, and this kind of ETF, for example, like SPY, QQQ, actually acquire and hold the underlying asset or securities on which this ETF value is based on or track. But leverage inverse ETF, as I mentioned, it's a financial instrument that offer magnified exposure to the movement of the underlying asset. So the underlying asset can be a basket of stock, aka index, or single stock, a stock name, bonds, or even commodities. So definitely that's so different. Leverage inverse ETF are synthetic ETF. So this is something everyone should know. And most importantly, the return of leverage and inverse ETF is daily based. As you can see from this slide, I have to emphasize that, which means they are designed to provide the certain leverage ratio of its tracking assets on the daily base instead of more than 1 day. So from this slide, usually the most frequently asked question about leverage inverse ETF is what's inside of leverage or inverse ETF. The components inside leverage or inverse ETF in the world are very similar. They are a combination of cash, equity, and derivative. Typically, in US, the leverage inverse ETF use swap to create to generate the leverage ratio. And in Asia, I think future is more common for the local issuer used to generate the leverage ratio. And leverage inverse ETF, this in US usually use swap, as I mentioned. A daily 3 times bull or leverage ETF is composed of cash, equity, and some derivative. And on the contrast, a daily 3 times inverse or bear ETF is composed of cash and derivative only, because that's bear, inverse. So definitely there's no physical equities or long position. Leverage inverse ETF are daily based. For example, I mentioned again, a daily 3 times leverage ETF is designed to provide 3 times of the index daily return, not 3 times of the index more than 1 day cumulative return. So this is very important, and I think all the investors should know that. And from this slide, I just want to go like quickly, here are 2 important characteristics of leverage inverse ETF. The first is daily rebalancing, and second one is the implication of compounding. For a 3 times bull or 3 times leverage ETF, daily rebalancing, process is usually done near or at the daily market closing time. The purpose is to ensure this ETF track as closely as possible to 3 times of the benchmark's daily performance. This daily rebalancing causes compounding effect when calculating the total return of leverage ETF holding more than 1 day. Here's an easy way to understand daily rebalancing. I think, Asian investors are pretty good at the math, so it's easy to understand what is daily rebalancing. Let's take a look at this slide. Still, let's take a look at the daily 3 times bull or leverage ETF. For example, when this 3 times leverage ETF tracking index rise, as you can see, for example, today, the tracking index is up 1%. The asset of this 3 times leverage ETF rise, right? So the ETF has to buy more exposure to make the index a daily market closing time, so that the ETF total exposure is equal to 3 times of this ETF's new level of asset for the next day. And as the ETF's net asset rise with the favorable market direction, the ETF must respond by increasing its exposure to the index and therefore amplifying the impact of the favorable index movement. On the contrary, as you can see from this bar chart, if the for 3 times leverage ETF, its tracking index is down 1% today, as you can see, right? Definitely the ETF must reduce its exposure at the end of the day to the index closing time, so that the ETF's total exposure is once again equal to 3 times of the ETF's new level of the net asset for the next day. So basically, essentially, what is daily rebalancing? Actually, daily rebalancings are, you can understand this way. We are leveraging up on up day and down on down days for leverage or bull ETF. This is the main cause of compounding, which I'll cover in the next slide. So now you understand daily reset, which means at the end of the market close, we need to adjust the exposure of the ETF to make sure the total exposure is the, like 3 times of the new level of the ETF asset, right? So what if the investor buy and hold leverage or inverse ETF more than 1 day? How did you calculate the total, the total return? Let's take a look at the implication of compounding in a trending up market for a 3 times leverage or 3 times bull ETF here. For example, as you can see, the gray line is the benchmark, and the blue line is the 3 times bull ETF. If the benchmark index move in the direction favorable to the leverage ETF in the linear trend for a period greater more than 1 day, like here in the past 5 days, the tracking index is up for 5 days in a row. The benchmark index rise steadily in the past 5 days in a row, right? and the total return of the index, for example, is 10% in the past 5 days. But you'll find your 3 times leverage or 3 times bond ETF total return is definitely more than 30%, which you expect might be 10% multiplied by 3, right? But you'll find the total return for your 3 times bond ETF is much higher than 30%. Why? That's because, as the ETF net asset rise with the favorable market direction, the ETF must respond by increasing its exposure to the index and therefore amplifying the impact of the favorable index movement. For example, Monday, its tracking index going up, which is favorable to this 3 times bond ETF. So at the market close, we increase exposure. And Tuesday, very lucky, the tracking benchmark increased again, right? And we already increased the total exposure at the Monday after market close, and the Tuesday market up again. So at the market close on Tuesday, we increased the exposure again. So from Monday, Tuesday, Wednesday, Thursday until Friday, every day, market's up, and then we increase the exposure of the 3 times bond ETF. So the compounding actually is work, in a favorable way for the leverage ETF. However, as we know, the market or tracking index, tracking index won't be up for like 1 month, 3 months, 1 year, right? In a volatile market like this shows, as you can see, there's no clear trend or direction. The impact of daily rebalancing can be harmful to the performance of the leverage or inverse ETF over time. As described, as mentioned, right? The ETF respond to the gain by increasing exposure to the index and respond to loss by decreasing exposure each day for bond ETF. Increased exposure in advance of a loss will generate a larger loss, and decrease the exposure in advance of a gain will decrease the impact and benefit of a future gain for the leverage or bond ETF. And as you can see, a continued pattern like this will cause the decay of the long-term return of the ETF. So in the table from this slide, as we can see, the example of a leverage or bond ETF that had a negative return after a 5-day period of a volatile but cumulative flat index return. The tracking index total return is 0, but your 3 times bond ETF will have loss. That's because of daily compounding and the daily reset. This is not time decay. So now you understand why I keep emphasizing that leverage inverse ETF are designed for short-term trading tool instead of traditional buy and hold long-term investment product. So that's very important. So I think the important thing for trading leverage inverse ETF, the key point and takeaways are the performance of leverage or inverse ETF is based on the daily price performance of the underlying index or underlying asset is daily. And second, holding a leverage or inverse ETF for a period longer than 1 day will be impacted by the effect of compounding. And trending market favor leverage or inverse ETF trending up or trending down because daily rebalancing or compounding. But in the choppy but flat no direction market, definitely don't buy and hold any leverage or inverse ETF because daily reset and compounding in a choppy market where there's no direction definitely will have a negative impact on the total return of leverage inverse ETF. So at the end, leverage inverse ETF are tools designed to deliver the potential for assets return by using leverage, but holding period and a view on the trend and the volatility definitely are also very important. From this slide, just want to show you, leverage inverse ETF, like I mentioned, I can emphasize, I can continue to emphasize that, right? Are short-term trading tool, unlike non-leverage ETF. So for non-leverage ETF, you can buy and hold this non-leverage ETF as a core investment, buy and hold for several months, 1 year without adjust your position. But for leverage inverse ETF, as you can see, similar to futures, option, warrant, CBBC, this kind of derivative product, they are satellite, which means short-term trading tool. Just to share with you, some survey for 3-time leverage or 3-time inverse ETF, the average holding period is 3 to 5 days. So basically, it's like a weekly base. And for some leverage inverse ETF, for example, semiconductor sector, 3-time leverage or 3-time inverse on semiconductor industry. This kind of ETF, leverage inverse ETF, are super volatile because the original index is volatile enough, and then we put 3-time leverage or 3-time inverse. For that kind of semiconductor 3 times leverage inverse ETF, we've seen a lot of investors are doing intraday, or they will definitely not buy and hold this kind of product, for more than 1 night or 2 nights. So this is very important for you to remember. Leverage inverse ETF are satellite product, short-term trading tool, not for buy and hold. And for next slide, I just want to show you how active trader or how active investor use leverage inverse ETF in the portfolio. Here are some examples. For example, we saw investor use leverage or inverse ETF to do opportunity trading, especially during quarterly corporate earnings season. For example, like right now, this is season, or whenever FOMC have a meeting or any inflation data is released. And many investors also use leverage inverse ETF as the alternative to futures contract, because leverage inverse ETF have a similar characteristic like a future contract, but there's no margin account or margin call required. There's no need for monthly rollover like a future contract. That's why leverage inverse ETF are popular, because they are easy to use, and the investors don't have to do the monthly rollover. Plus, not all benchmark or all assets in the world have the corresponding liquid future contract to trade, right? Such as MSCI Emerging Market Index, or like a U.S. financial sector index, etc. So investor will use leverage or inverse ETF to tracking this benchmark or this asset to trade through the rapidly changing market. During the down market or volatile market, many investors also use inverse bear ETF to hedge the market plunge in the extreme volatile market environment, because for bear ETF, if they're tracking benchmark or tracking asset goes down, the bear ETF price will go up. So that's why it's easy way for investors to use inverse ETF to hedge the down market or to hedge the market volatility. So I think at the end, this is just very important. Like, as you understand, daily reset and the implication of compounding effect on leverage inverse ETF, now you should know leverage inverse ETF are not suitable for every investor unless you are a sophisticated investor and you understand the risk associated with the use of leverage or inverse exposure, and you understand the result or consequences as well. And you are intend to actively monitor or manage your trade, your portfolio on a daily basis. In this way, leverage inverse ETF might appropriate to you. But if you are a very conservative and long-term investor, you don't even know what are futures contract, and you have no idea about any derivative, financial derivative product, probably leverage inverse ETF are not the right tool for you unless you really understand, how leverage inverse ETF works and how to use this kind of product in the correct way. So here, I wanna, from this section, now I want to share with you with the popular trading theme and potential opportunity from the perspective of a leverage inverse ETF issuer. The first thing is the increasing market volatility with the uncertainty over Trump's tariff policy. There's some information or some research data. According to Goldman Sachs, tariffs are definitely a key downside risk to their 2025 corporate EPS forecast. Their economists expect the tariffs will raise the effective tariff rate by 5, like a 5 point, something like that. And they expect that every 5 point increase in the U.S. tariff rate will reduce their 2025 S&P 500 corporate EPS estimate by roughly 1 to 2% and lower their expected EPS growth rate by around like 10%. So heightened policy uncertainty represents downside risk to the valuation of the stock because it raised the equity risk, it increased the equity risk premium and implies downward pressures on the stock's fair value. So therefore, recently, actually, we've seen the increasing demand from active investor or traders to hedge the volatility or down market. U.S. traders are turning to complex hedging strategies to manage the increasing volatility as Trump's tariff policy, right? And the trouble for some traders is that options actually are a favored instrument for many traders to manage the market risk, and option prices are becoming more expensive as the jitters around, the tariff policy and the Chinese AI technology and the peak earnings seasons coincide. And for traders, actually inverse ETF such as 3-time inverse, 2-time inverse, or like even 1-time inverse ETF tracking S&P 500 or tracking some specific sector are alternative hedge tool which are simple to use and low cost compared to other derivative instruments. For example, for 1-time inverse ETF, the compounding effect is much less than 3 times inverse ETF. If you understand daily reset, for example, 1-time inverse ETF definitely will perform like the mirror reflection of its tracking benchmark. For example, if S&P 500, for example, in the past 1 week is down 5%, 1-time inverse on S&P ETF definitely will up very close to 5% because it's just 1-time inverse. There's no leverage ratio. So this might be something for some investor. For example, you already have lots of stock in your portfolio, but you don't want to sell the stock, but you want to do the kind of short-term hedging, but you don't want to go to 3 times inverse. 1-time inverse ETF might be some alternative for you to use to do for example, like a short term, for example, like a week or 1 week or 2 week, the hedging to hedging your portfolio or hedging the market downturn. And the second thing, definitely is the U.S. big technology stock. As you can see, the Magnificent Seven has been, a pillar for S&P 500 sales and earnings growth during the last few years, right? They are the key driver and the leader, but the magnitude of the surprises has declined, and the participation from the other 493 stocks on this index has broadened, especially from this year. Actually, in the second quarter in 2023, the Magnificent Seven reported quarterly sales that were 2.5% much greater than consensus estimates. However, in the latest earnings season, excluding NVIDIA, the Magnificent Seven is yet to, NVIDIA hasn't reported its result, right? And the other Magnificent Six group post the revenue that was in line with expectation, but it's much lower, the sales surprise compared to the rest of the stock of S&P 500, the positive surprise is narrowing down. So that makes this also marks the first quarter with no positive sales surprise from the Magnificent Seven since 2022. So on the earning per share basis, the gap between the Magnificent Seven big technology company and the rest of the 493 companies on S&P 500 narrowed to 99 base point from a peak of 66 base point in like 1 year ago. So we can expect the relative performance of the Magnificent Seven versus the other 493 stock will narrow in this year in 2025. And the outcome of the outperformance of the Magnificent Seven definitely, has historically reflect its earning, superior before. But this year, many investment banks expect, the gap and the difference between big technology company and the other industry or small cap or mid cap stock, the earning growth definitely will narrow down. It doesn't mean there's no investment opportunity for big tech stock. This implies that buy and hold investor strategy in technology stock in this year might not work that well, compared to like last year or 2 years ago. The big technology stock could be more volatile this year, which also could bring more short-term swing trade opportunity instead for short-term trading. For example, Tesla has been very volatile year to date, and swing trade with Tesla leverage or inverse ETF definitely provides some short-term trading opportunities year to date. If you don't do like a long-term buy and hold, you do like a short-term swing trade with this single stock leverage inverse ETF. Definitely there are some like short-term trading opportunities for sure. And the third theme, the popular theme, definitely is the AI chip stock. And AI chip stock are still in spotlight this year, especially with China, like a deep sea shock, in the market. There are many catalysts in this sector for traders to take opportunity trades. For example, NVIDIA's earning announcement will be at the end of February. So definitely, I know many active traders are waiting, to trade, the earning result of NVIDIA. So that create a lot of short-term opportunity trade on the earning report release. And also, for example, TSMC, people talk a lot about this company. TSMC, announced a strong earning result a few weeks ago. Recently, there are more news. For example, hey, is there any like potential Intel TSMC or Intel Broadcom partnership in the future? So this is also some news, and which also create some catalyst to trade like TSMC, Intel, or Broadcom, and leverage inverse ETF tracking this single stock definitely bring some good opportunity, for people to trade. And early March, there will be the Mobile World Congress, MWC, for AI or technology company. This annual event conference is very important, and this MWC conference this year definitely will focus on AI again, and AI topic is expected to dominate, the whole key session. So definitely this big name, AI chip, or the chip company or AI company definitely are some good thing or good story for people to trade. And don't forget, in the US, you can find all these, many AI chip stock, single stock, leverage, or inverse ETF. And also like Palantir stocks is up 585% since early last year. So can it continue to rally this year? So in US, you can also find leverage inverse ETF tracking this, high volatility stock to make the short-term trade. Definitely investor can find single stock leverage inverse ETF tracking this popular AI chip stock such as NVIDIA, TSMC, Broadcom, Micron, Palantir in US so many big name in US, definitely you can find the corresponding single stock leverage inverse ETF to trade. And for some investor, who want to do the long-term buy and hold or don't want to trade, actually there's some other index or strategy you can use this year. For example, in US, you can find some ETF, non-leverage ETF, which is tracking NASDAQ 100, but equal weighted index instead of NASDAQ 100 index. As you know, NASDAQ 100 index is a market weighted index, right? So NASDAQ 100, if you invest in QQQ, which tracking NASDAQ 100, which means you invest 50%, of the, like a weighting in the Magnificent Seven stock, right? Because it's a market weighted index. So actually this year, the NASDAQ 100 equal weight index, which means only 1% is allocated to each component of NASDAQ 100 stock. Apple is 1%, Google is only 1%, NVIDIA 1% instead of market weight. As you can see this year, the equal weight strategy from this slide, the orange, the orange color, the line is equal weight NASDAQ, and the white line is the NASDAQ 100 market weight. This year, very obvious, the equal weight on NASDAQ ETF strategy outperformed market weighting of NASDAQ 100. So, for example, some ETF that is tracking NASDAQ 100 equal weighted index, this kind of strategy can help reduce the concentration risk on magnificent, or the big technology company. If you believe this year, like a mid cap or small cap or non-technology stock, non-technology sector might have, better performance, and the gap between big technology and the other stock, the gap will narrow. There's another way. Just choose some like equal weighted on NASDAQ to kind of reduce the concentration risk on the big technology ETF invest. So definitely you can find the ETF in US market as well. Another famous trading scenes I can see definitely from last year is bond trading. Actually, since last year, in Asia market, I've seen a lot of trading or cash inflow into like a 3 times leverage, which means 3 times bull ETF tracking US Treasury. That's because last year, many investors expect the Fed will trim down more, will have the more rate cut. But this year, as we can see from this slide, the yellow line is the US Treasury 10 years yield, and the white line is the ICE US Treasury 20 plus yield index. So we know US Treasury yield has negative, is negative correlation to the bond price. So actually many people use US Treasury leverage or inverse ETF to trade the US Treasury swing. Recently, we found that US traders actually are turning to complex hedging strategies to manage increasing volatility as Trump's tariff fear increase, and because traders and investors are afraid that Trump's tariff will bring the inflation again. So traders actually, they kind of unwound Treasury futures position across a shorter maturity recently by the most since November as Trump's tariff policy spooked market. Meanwhile, investors in cash US government bond have pulled back sharply from the biggest net long position in almost 15 years, according to JP Morgan Chase latest client survey show. So, with the increasing volatility in the US Treasury yield move, definitely leverage inverse ETF tracking US Treasury might be some tactical or like a nimble tool for investor to kind of to do some short-term hedging or some short-term like betting on the U.S. Treasury the price movement. So this kind of thing definitely has been very popular since last year until now as well in terms of leverage inverse ETF. And the last thing definitely I believe you heard a lot from the news, like a news magazine or TV channel. Definitely is a deep sea shock fire up the bullish bets on the cheap China tech stock. Definitely China's growing influence in AI has sparked optimism toward the China tech shares. Definitely with the Hang Seng Tech Index entering a bull market, as you can see from this slide, left-hand side. Chinese startup, DeepSeek AI model is being hailed as the game changer for the technology, highlighting the China's innovation capability and prompting a broad re-evaluation of China's beaten down share. So definitely recently from the leverage inverse ETF issuer, we got a lot of like requests about the information about definitely China, like China internet, China tech. So for this kind of ETF, or for this kind of thing, definitely this China or China tech are the most popular recently, especially in the past 1 month. There are some ways to involve into this kind of market buy ETF for sure. For example, traders who are taking bullish view at the China Hong Kong stock market can look for leverage ETF tracking FTSE China 50 index, which is comprised of the largest 50 Chinese stock listed on Hong Kong Stock Exchange. Chinese big technology stocks such as Tencent, Alibaba are among the top 10 components of this index. As you can see, the top 10 holdings of this index already include many big Chinese tech names. There's also inverse ETF tracking this index as well for traders who want to take the opposite bearish view. If they think China tech is overpriced because it's ready in the short term, ready too much, and want to play the short term, the stock, potential stock correction. Inverse ETF tracking this index is also, can be found in U.S. market as well. But if you are the investor who really want to just focus on the China, like a pure technology or pure China internet, this index probably you should know, which is CSI Overseas China Internet Index. There are ETF and leverage inverse ETF tracking this index. So for traders who want to focus on the trade on Chinese tech or Chinese internet stock, definitely you can look for the ETF, non-leverage ETF or leverage inverse ETF tracking this CSI Overseas China Internet Index to express your short-term bullish view or bearish view. As you can see, the top 10 holding of this index is like Tencent, Alibaba, Meituan, all these, big China internet company, big China internet stock. So this is another options, if you want to trade ETF, and definitely you can find all the non-leverage ETF or leverage inverse ETF tracking this index. And at the end, this brings us to the end of the webinar. Thank you again for your attention, and I'm definitely happy to answer any questions if you have.
All right, thank you, Grace, for the insightful update. Okay, let's run through to see what are the questions that we have. From Robin, what is your outlook on US markets? Are there more upside?
That's very good questions. I just before the webinar, I had some like a brief discussion with Vincent about that. Yes, I mean, and personally, of course, I hope there will be more upside personally, and also I believe there might be more upside, but it really now depends on how the Trump tariff policy goes and whether this tariff policy will bring U.S. inflation ready again. I think that's the biggest risk. Like if the U.S. inflation ready again, I think that will really hurt. Like I mentioned in your about the earning of S&P 500 corporate, right? The corporate earning definitely will be hurted if the inflation ready again, and also decrease the consumption power of the American consumers.
Yeah, but I think the tariff hasn't been effective yet. I mean, they've been announced and taking a pause and probably in March and whatnot. Yeah, so let's see how things go from there.
Yeah.
Uh, Okay, I think US so far, I think so far it's been pretty decent, I think.
Yep.
So okay, I think so far, I think the earnings season have done quite well. Some of the earnings, that's why you can see that the US market is hovering at the all-time high. Okay, which US stock ETF are leading the market recently, and what key factors are driving their performance?
Yeah, I mean recently from the earning report, the Q4 earning reports, we can see, I mean, still this big technology company are still like leaders and that are still driving the overall market move, the stock market move. And in the short term, I mean, definitely, I believe, like the chip AI, this kind of thing or this kind of sector definitely will continue to lead the stock market for sure.
Amid the current macroeconomic landscape, which ETF sectors such as technology, energy, or finance present the strongest investment opportunities?
Which sector in terms of financial like
Yeah,
yeah
yeah.
uh, yeah, I mean so far, I mean just let's take a look about the all the like earning result from all the like most of the S&P 500 ETF. Let's take a look at the technology sector. I mean so far most of the technology companies earning kind of or like meet the expectation of the market consensus, and actually see as some, I mean, more positive surprise, for example, like a financial banking sector, right? Actually, if you remember, because financial banking, all these US big banks or big banks start actually have performed pretty well, because when they announced the Q4 earning return also kind of beats the market expectation, the census. So from all this the data, I think like a technology and the US financial sector definitely will continue to to do a kind of decent job, and with like a good like a financial condition.
Okay, I think some insights they're asking, how are the recent ETF inflows and the outflows shaping the market trends? Which ETFs are attracting institutional investments and which are seeing capital outflows?
It's a very good questions. Recently, we've seen a lot of cash inflow, especially into like China, Hong Kong market related ETF, and also interesting, also some more single stock leverage ETF. For example, we saw like Tesla, Nvidia, and that kind of big name. Especially Nvidia is going to announce the earning soon, I think next week. So definitely very interesting. In the past 1 month, um, a lot of cash inflow actually is going to some single name, leverage or inverse ETF with the earning report announced and China, and definitely U.S. Treasury is also interesting. Last year, significant cash inflow into three times leverage ETF tracking U.S. Treasury. But this year we also see some with the the volatile of the U.S. Treasury yield. The yield continue to rally, right, to increase. And we also see some short-term like inflow into some like a three-time inverse or like bear ETF on U.S. Treasury for the short-term trading as well.
Yeah, bond interesting. The yields you can capture from the ETF as well. Okay, I think there's a question. Any direction ETF to capture the China tech stock upside?
Sure, yes. I mean, the ETF that tracking this CSI Overseas China Internet Index. But I'm sorry, due to the compliance, compliance rule, I can't name the ticker or name the ETF name. But definitely on Rakuten Trade platform, you can find the ETF, non-leveraged ETF, or leveraged inverse ETF tracking CSI Overseas China Internet Index. So yeah, I believe you can find that on Rakuten Trade platform.
Yes, you're right. Okay, which sectors have the highest leverage ETF returns in the current market cycle, and what factors are driving these movements?
I mentioned that recently, with the significant short-term return, something like a single stock leverage ETF tracking Palantir, because we know that it's really a lot, really crazy, a few weeks, just 1 week. And recently also, for example, like yesterday, the micro stock also really a lot. So recently we saw the big movement on the price is up or down. Recently we've been we've seen more actually on the single stock leverage name. Yeah. The index, we know index is a basket of the equities, right? So yeah, definitely, like a semiconductor, three-time leverage or three-time invert. I mean, most of the time, have a big upside or downside movement. But recently we will see more, concentrating on the single stock name.
Yeah, yep. I think the single stock name provides more exciting compared to the index. Index,
Yep.
even your leverage, you won't see that kind of movement because I said some of the names, super microcomputer and all those Palantir, Tempest
Right.
AI, those have seen big movements. Okay, I think someone was asking about what ahead for US markets, January effect. I think January is a positive month for US. So I think yeah.
Yeah. Yeah, sure.
How do you view this year's China stock market? Since last September, China stock performance generally like behind Hong Kong Hang Seng Index. I think from Mr. Yong here. The China market here compared to the Hang Seng Index seems to have lagged behind. So yeah, your view on that?
Yeah, China market.
China market, yeah, compared to Hang Seng. I think Hang Seng have rallied strongly. I think what you're trying to say is that China market seems to the China market seems to have lagged behind Hang Seng's performance in index here.
Yeah.
So what's your view? Is there
Yeah, I think recently, especially if you compare let's put it this way. What is the like a most representative China, I mean Asia market is like a CSI 300 index, right? And definitely the CSI 300 index more, I would say more diversified, it's not really concentrate on some like Alibaba, Tencent or technology sector, which is so different from, for example, the index, for example, I say Fuji China 50 H share, which is the largest 50 Chinese stock listed on Hong Kong Stock Exchange. Now, of course, if you check this, wait for a second, let me use this. If you check Fuji China 50 index, as you can see, the sector breakdown, the number one is consumer discretionary, and the second is a financial, and the third one is communication service, and then is information technology. So for these, but the top 10, Tencent and Alibaba are still, the top one and top two. So actually from last October, the in terms of sector, the China tech, sector is still kind of, I mean, most of the time, like outperform the other sectors. So that's why if the question is that, yeah, it seems like Hong Kong, kind of outperform China. I think that's also one of the reasons because the sector breakdown, on some key representative index are quite different as well.
I think yeah, the Hang Seng one, Alibaba, Tencent, all those have done very well. So yes, power it up. Yeah.
Yeah.
Downturns, and in which scenarios might they be most effective?
Sorry, the question again?
Inverse ETFs perform against the hedge against. Oh, sorry.
Which
Can you hear me? Sorry.
Yeah, let me
Um,
check the
how has
which page.
how has inverse ETF performed as a hedge against a recent market downturn, and which scenarios might they be most effective?
Oh, okay, okay. I think if you check, for example, let's check Tesla. Yeah, year to date, early this year, Tesla have been kind of, keep going down. Yeah, and definitely, as you can see, when you compare Tesla two-time leverage and Tesla one-time inverse, actually Tesla one-time inverse have the definitely pretty good return with the Tesla stock, plunge in the short term. So this is some example how inverse ETF perform as a hedging tool, and in which scenario might that be most effective, especially when the tracking benchmark show a very significant downtrend. For example, like I mentioned, like a Tesla, like a down for like a 1 to 2 week up, obviously. So this kind of good the good way to trade. Or for example, if you remember, early this year, like U.S. Treasury has been rallying in the short term, like a 1 to 2 weeks, right? And during that very, in that kind of trendy down market, is also the best scenario to use inverse ETF.
Yeah, okay, there you have it. That's how you would be
My view on Intel.
to capture the downside. One last, yeah, would benefit from China's AI trend.
Oh, I think, yeah, you'll see that so Intel news recently, because now it's not just about like that the performance, not that the stock performance hasn't been well, of Intel. And recently also maybe you heard more news about, yeah, because TSMC, Broadcom may want to kind of hail as a partnership with Intel. So I don't think in terms of like of course it's really difficult. I mean just to check. I mean that's based on the the data, right? Intel, yeah, it's really difficult to compete with like TSMC, or really in terms of like the chip. So the long term outlook for Intel, in terms of like a corporate earning, probably not that positive. But in terms of like a short term, let's say short term trading opportunity, with all this news, now Trump may want TSMC, to it is some kind of collaboration or partnership. I think there might be some trading news. I mean, I say in terms of opportunity trades, yeah, in the short term.
Yes, agreed. I think Intel now probably is more news driven, so called kind of thing.
Yes.
The TSMC brought
Yeah.
looking
Broadcom,
to acquire,
Intel. Yeah.
Broadcom looking to acquire them, and also some collaboration. Trump and wants
Yeah.
we have to keep Intel. So those are the news driven So I think, let's say, short-term trading, I think it rebounded yesterday. I think so. I mean, some pretty decent jump the other day. Yeah. So yep, I
Yeah.
think most of the question has been, I think, answered. Perhaps one last one. How about the Bitcoin? About the Trump trade? What is your view on the Trump trade and the Bitcoin?
Well, it's
Any
like, as
comments on
you
that,
can
or any
see,
ETFs?
well, we can see that, yeah, definitely in US, I believe all investors can find all like ETF tracking cryptocurrency directly, or like a tracking crypto like a currency future, etc. Blah 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 blah. And also you can find some ETF tracking crypto industry index. So there are many ways. For example, I don't, to be honest, I don't know the rule in Malaysia, but the crypto ETF or like a crypto related product actually are still not available in many Asia markets. Because a local regulator, many local regulators haven't lifted the ban yet. So actually there are for investor, like I mentioned, if the local investor cannot trade crypto, like directly tracking crypto product, definitely you can find some alternative, for example, some crypto industry stock or crypto industry ETF. For example, in US, you can find two times leverage or like an inverse ETF on crypto industry index, which will be, you can still get involved into this industry, but you don't have to take the risk of like get access to like a cryptocurrency directly. So this is another way, alternative way for investor to get involved into this market. But I believe in the coming 4 years during Trump's president service, definitely this sector and this kind of asset will continue to gain more attention, or like a trading appetite from the world.
Yep, certainly agreed, Grace. And also, I think those who, I think some exposure, probably they could look at those Bitcoin miners. I think there are quite a number of single name listed Bitcoin miners available on exchange as on Rakuten trade platform as well. Those who want to have some exposure.
Right.
Okay, thank you so much. I think we have answered all the questions, and a lot of insights from Grace as usual. I think direction and some of their ETFs, one of the more innovative one, single name, and also some of the sector ETFs. So those are all available to trade on Rakuten Trade. Okay, any final wrap up from Grace?
Yeah, I think that means just just a few sentences. Like I expect the market won't won't go that smooth as last year. The market would be very volatile this year. So the volatile market doesn't mean you don't have investment opportunity. Sometimes volatility creates some opportunity trade, or we call swing trade, right? 1 to 2 weeks, if they are very significant, like trending up or trending down market, by using some like a short-term trading tool, such as Leveaged ETF, or just do some like a short-term opportunity trade, also can kind of generate or create some potential good result as well. Yeah. So I was just, definitely this year also be cautious of the market volatility, but also pay attention to more like some short-term trading idea or some short-term trading products.
Yes, I think I agree with that as well. Grace, I think the volatility present opportunities as well. I think a certain pullback, I think it's always good to wait for pullback. Then you can buy in the rebound. I think some of those, like previously Nvidia dropped to about 118, it rebounded. So I think one thing good about
Exactly.
US market, I think buy the dip, it helps. It helps. I think it works and so far because of the earnings and stuff like that. Sometimes they meet the earnings, a bit of weak guidance, pullback, then there's opportunity for you to buy. Not necessary that it has to be uptrending. I mean, some pullback allows you that's why the volatility comes in. And so yep, like great
Yeah,
volatility, but
totally
there's also
agree. Sure.
opportunity. So yep, good luck everyone.
Good luck,
Good luck everyone.
everyone.
Okay, thanks so
Okay.
much, Grace, once again. We'll have you again soon. Yeah.
Thank you, Vincent. Thanks,
Bye bye.
everyone. Have a good evening. Bye.
Thank you.
Bye-bye.